Hello, and today I'll be going through and explaining a strategy that I use today for a very good trade on gold. And it's called the ABC strategy, and I don't really use it that much, but I use it in confluence with some of my other kind of main strategies, which is obviously the time-based quarterly theory model. And it's a really powerful technique in the markets where you're not sure of direction, and it usually points you in the correct direction. So obviously, like I said, the strategy is called the ABC strategy. It's used by a lot of ICT traders as it's kind of liquidity based and works on the idea of a liquidity sweep. So let's just have a look at what this strategy is. So if you have a look at this model that I drew, you notice three main legs of this kind of part of price action. The first one being this A leg, the second one being this B leg, which is just a retracement, and then a final manipulation C leg, which sweeps the liquidity of this A leg high. You'd then expect a market structure shift, leaving behind some efficiency where you could then enter the trade and target some area below. Usually, how this is taught is that you target the B leg low for a sell, or in other cases you could also target the A leg low. But I'll show you a way to kind of refine this later on in the video using standard deviation. The same thing also applies for a bullish one. We'd get the A leg, you get a B leg retracement, and a C leg sweeping the low of the A leg, leaving market structure shifts and an inefficiency to take a long position. It is important to note, however, that these legs should not exceed more than a few pips. If this leg is like this is not considered an ABC unless this entire move is just a wick. Wicks are preferred, but if it is a body closure, you don't want to see more than 1 or 2 pips closure below this leg. You just want to see some kind of wick form like this. So that's the whole idea. It's very simple. You're basically just looking for some kind of Z pattern or like a lightning bolt to form. And it's important to note that this is really just a strategy for ranging markets that kind of move like this and not really go anywhere. It's a good way of identifying areas where price would reverse. So let's have a look at the chart. This is the gold chart for today. And first things first. So obviously you could see that we are preparing to go into the New York session. We're currently in the London session. So what you do is kind of prepare for the New York session by having a look at the time-based fair value gaps and inefficiencies. And I can immediately see one over here. So this is a very good area to start looking for longs, since it was formed during yesterday's New York session. So we have an area of inefficiency that we'd like to target. We could also identify this area as area of liquidity that can be swept. So, well, swept is probably the correct word. So we have some kind of liquidity, and yeah, this looks really good. But what do you notice from this earlier section of price action on the 1 hour? So this is where the strategy comes in. We can see that the market is kind of ranging. It isn't going anywhere like this. It's just kind of sitting around. And this is a perfect breeding ground for the ABC. So we have this A leg from the top of this move to this one, the B leg, which is the retracement, and the C leg, which goes down. And as you can see, it kind of just nearly just swept out this low. And you can see that's only just a few pips of movement. Ideally, you'd want to see a wick in this area and a candle closure above this low, but this is still acceptable. Still a liquidity sweep. And what we then got is a fairly substantial move during yesterday, a very bullish run, causing a bullish market structure shift. And this is literally exactly the bullish pattern that we saw yesterday. So we'd have the ABC, we'd have an inefficiency during the market structure shift, exactly like this. And in this case, the inefficiency was also time-based, which is perfect. So we'd like to see price come back into this area during the New York session and we could then look for entries from there. So if I just move time along a bit, it's roughly about there. And if I then move down to the 5 minute, we can start refining our entry and look at areas to enter. So let's speed time along a bit. So we created that high and we swept a bit lower. So we kind of look for this area to be taken for a market structure shift. So we broke this area now, but we didn't get a candle closure, so it's not yet a valid market structure shift. And so we try to sweep, but we didn't close, and we stepped a bit lower, and there we got a candle closure. Never mind the wick, we got a candle closure above the previous high. Now this is where the idea of change in state of delivery comes in. So change in state of delivery is basically an early sign of reversal before a higher time frame market structure shift. And these last few bearish candles before the break of structure on a lower time frame is the change in state of delivery, because on a higher time frame these would be a bullish order block. So what you do is you'd kind of enter right as soon as you see that candle closure, you'd enter your trade. And then again, you would target the highs of the B leg, which is all the way up here. Now there's this cool trick using standard deviation that works like this. So if you put your standard deviation for this entire move, the manipulation move that then breaks structure, you could then place, have an area which you could target for, this entire leg, a take profit, and I could move my take profit to right about there, the negative 2.5 standard deviation, which is a perfect area to start looking for taking your profits. You could even go up to the 15 minutes and see that this entire leg that broke structure could be used, but this is also fair play. In that case, a standard deviation of right about there would be good. So right there. So that's your order. Now if we just speed time along a bit, let's go back to the 5 minutes and see how this plays out. Right there, boom, price just went straight through. I'll take profit, and that was an easy 1-to-4 risk reward ratio. So as you can see, this trade played out very well. This was all due to news actually, but news is calculated, which is something you should remember. News is always planned and calculated in these types of trades, so at least in an institutional aspect. So just for interest sake, these are the numbers for the standard deviation. You'd want to take your profits at the -2 and -2.5 areas, or at the very best the -4. I'm pretty sure price reached the -4 area today. It did actually, so you could have taken your profits at the -4 standard deviation, because as you see, after price took that, it just consolidated. So it's a very good area to start looking for take profit. So there's a 1-to-6 trade that you could have gotten with a simple ABC strategy. So it's really powerful. Again, A leg move, B leg retracement, not higher than the A leg, went lower down, swept liquidity, created a market structure shift, left behind a time-based inversion or busy, buy side inefficiency. Price then tapped back into it during New York, created a 5-minute market structure shift or change in state of delivery right there. Entry on the first candle closure above that high, targeting the B leg high, or if you do want to, you could use the standard deviation to target the -2.5 or -2 levels, take partials and let it walk all the way up to the -4 standard deviation. It's a really cool trick, really good strategy, and it played out really well today for me. So yeah, that's basically it, and thank you very much for watching. Please do leave a comment if you like these kind of videos, and if you do, I'll start making more of these on a regular basis. But yeah, that's it. Until I see you again, cheers.